Awesome. I'm adding Anne Marie Bain to the chat. I'm going to get out of here. They're here for you, not me. Anne Marie, good to see you. I'm going to let you take it away.
Thank you very much. It's my first time with you, Elliot, so this is going to be fun. So sitting in this cannabis space, what we really want to learn about when we invest is where might things look like they're doing the best, and what might we think about in terms of making the choices, right? Because we do have choices. Our finances are not limitless, though we might like them to be, and sometimes we trade like they are. They're not. And so being part, I do want to apologize if you hear any noise. There's construction going on the other side of the house, and so I'm as far away, but I still hear it coming through drilling and stuff. So forget about that. Hopefully you can. So my thought is, as you look at through all of these cannabis positions, you've got to come to the space where you go, okay, what do I invest in and what do I hold for long term or take the trade on? And so you've got to think about things from two perspectives. Am I trading this or am I investing in this because it's got a future runway? Now, a lot of the cannabis and microdosing psilocybin sort of spaces are very forward moving in terms of thought because they're still illegal in many states and certainly at the federal level. So what we want to see is our legislators first making this something that they're going to endorse, because remember, at the end of the day, with the stroke of a pen, they can say, I don't think so. Not that it might not turn around, but this is the thought that you should always have in the back of your mind. What do we need to see in terms of saying, where is the end of this road, or is it continuing? Now, because I'm on a travel machine, my office is back there. Elliot, I need for you to come on when I have about 5 or 10 minutes left so I can.
Done.
Thank you so much.
Yeah, of course. And are you going to share a screen just in case you are? We're not seeing it yet.
Okay, so I do have a share file.
There it is. Okay.
Fantastic. All right, great. Great. Okay, so what we're looking at is one of the several of the choices that you went through in terms of looking at what people want to hear from. So that's the first thing. The second thing is, when you're thinking about how is a stock performing relative to the others, one of the first things you can do is use a big ETF that has a combination of all of the different companies that are liked, or they should figure are sitting in this space. And you can see the form. It was doing very well in February, and then we had ourselves a little bit of a rollover. And in general, the ETF that corresponds to the broad space of cannabis looks like this. So if you're thinking to yourself, all right, do I want one that looks better than this? Or am I thinking that there's one that might be underpriced that's going to rise? And so the last folks that we had on is a great one to look at, because is this one right? Yes, this is it. So this one that the gentleman, the CEO, Tim, that we just heard from, this is their chart. And so you can see that compared to not Tokyo, but Toke. I think that's a hilarious name for an ETF, but it's definitely underperforming what's going on right now, right? I wish I had a compare so that we could see that more plainly, but this is an underperforming company in terms of what it is that's going on. Doesn't mean that it can't lift, and it's great that they've got things in the pipeline, but they're a little bit out of favor. And so you can think to yourself, well, wait a second, do I like that presentation well enough to go, I'm going to make a little bit of an introductory position in here and wait for it to rise because I think they've got a lot on the ball? Or if you're thinking about trading, you end up looking at something like, my goodness, my fingers. You look at something like Tilray, which looks very much like the ETF, or the favorite Sundial, which also has the same shape, but at a fairly good price. And so this chart I like because here's what's happened. When a chart moves, and remember this, we invest in the market to make money. If you believe in the product, then you buy it and you use it and you share it and you recommend it. But if you are looking for an investment grade product that you're going to buy and hold, you want to see how big hands believe that it's performing. And so one of the very interesting things that Sundial has done in the very recent past, it's had its opening, it faded savagely, raised savagely, pulled back, lost its breakout, but is now sitting right above it as we speak today. So the question then becomes, what's most likely for this price pattern? Notice it has the same shape as the ETF, and it also has the same shape as Tilray, right? The same thing. What it hasn't done, what Tilray hasn't done, is retested any of its breakout levels and recaptured besides this highest one. So the big thing that we see in cannabis, me as someone who's looking always for investment grade vehicles, the thing that I like about what's happening in the cannabis space right now is there are mergers and shifts of strengthening boards on the at the CEO and chairman of the board levels. These sorts of operations where people know what needs to be done to get business to market and to get it to market well, they're now starting to come onto these boards and making a real difference in how these products get to market. And I think Sundial is going to be one of those interesting ones that really has got exponential growth that could very well give us exactly what we want, which is a combination of a company that we like, a company that we might use its products, and a company that's showing from the investment world that it's holding a measure of frontline support. So we're going to look at it in a couple of ways. When you trade, the first thing that you want to look at is, where is support and where is resistance? The two most important things you will ever learn from technical space is, where is the last time people sold and then bought again? And that number is right here around 70. Now we're sitting at maybe $1.20. And so that's about 60-70% away from where this support zone is. So if you're saying to yourself, listen, I want to take an introductory trade that says my old support is new resistance, and can I make this bigger that way? Nope. Candles. All right. If I want to make old support that was resistance to become support again, I'm going to think to myself, well, wait a second. Last time they did that, They broke all the way down to this wick at 92 cents, and then they started bouncing. So for me, I'm going to look somewhere around 92 cents to 93 cents to take an introductory position. Is that aggressive in terms of saying, wow, what if it turns around and runs without you? Yes, it is. And that is risk. But here's what I want to share with you. If I were to put a line here, and that is, can I really do that? If I were to draw a line from high to lower high to lower high, I would see that I've got a trend that's still negative. If I use a line from here to here to here, I also have a trend that is still negative. And when you have a trend that is negative, what will happen is the following, and I'm going to show you this way. Let's say you've got a trend that just fell off a cliff, everything's negative, and you're looking for the chance that it's going to break back out. So you're going to go to a gap or anything like that, and you're going to say, okay, wick, I'm going to draw this line, and what I have to see to show strength to hold long-term is a hold over 171. That is still going to be your number to watch. So if you happen to make it on dip, or you own it from very low, when it gets here, take some profit and wait for it to rotate backwards so you can add to your position again. That's called a rounding, trading around the position and watching the rounding that holds as support. So watch this. Wick, this is the one we got. So we're right up here and we're thinking to ourselves, oh my goodness, this is the breakout. But in any negative rotation, what a chart will do is first stop heading lower. The second thing it'll do is bounce into resistance. And then the third thing it will do is pull back to hold support. And guess what happened here? If we look at this as support, it broke right through it. What does this mean for you and me as we are trading and looking for a good investment level to trade here? It means that we have to wait as it comes up into this area. Let's say we catch it here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days to figure out whether that's the breakout pattern or not. If it held here, you could have said, all right, as it bounces up over here, I'm going to take it, and my new stop will be $1.34, right there under the old wedge. But remember this, whenever a chart is breaking out of a range or a trade action event that's got negative drift, you're going to see the same thing every single time. If you're a bottom picker, this is what you'll do. You'll say, ooh, I want to see if it holds this level right here. What it has to do is stop holding lower lows and lower highs. And so here's what happened. We had a low and then a lower low and a lower high, and boom, there's our first thing that says, I could be changing direction. I've stopped holding lower, I've bounced up, and I've now closed above these levels, and we'll expand it some more so you can see that. It's above these levels, and so for the next trade, if this old support gets jammed through, I'm going to put an order in, and I'm going to try and buy it at that old support. Some of us rush out and just buy, and then things fade back onto us. But here is the absolute truth. When a chart has negative pressure, it is absolutely going to bounce into resistance and fade into frontline support if it is doing a normal rotation. And if that negative drift is very high, it's going to move from one level of resistance to the next. And so this tells you where your target formation is if you're trading from one level of support to the next level of resistance. And the moment you come to a day where you go, wow, I am failing to close higher, your next spot will be, am I breaking my old resistance that now should hold as support? Well, it holds that area, opens and pulls upward, but does not break the high. And this is the formation that you look for when you're going short. It looks like this. 1, I failed to close higher than the day before. You go to the next candlestick, just 2 candlesticks over, and you say, all right, what's the low to the close there? That's going to be my support zone. If I bounce off of that zone, but I do not break the last high close, my next candlestick tells me I can short. Where am I going to short to? My last area of support. If it holds, I can now move this as a stop, and I can walk down the level. Again, how do you know when to stay in a trade? Oh, it's bouncing. Yes, but does it break resistance? Old support, new resistance, I'm staying in the trade. Down, down, bounce. Does it break resistance? No, I'm staying in the trade. And this is how you stay in a position. Many traders will say, I don't know when to get out. This is how it looks, especially if it's got downward pressure and you're trying to trade long. For the opposite, it's going to look just like this. 1, you're going to fail to hold lower, but you're not going to be able to close a candlestick over, here it is, old support. Old support resistance. 1, I hold my low, but I can't break resistance. It means it's still a short. I hold my low, but I can't break resistance. It still means my bounces are shorts. Holds the low. All of this says, listen, I can stay in this short. The big thing that you start seeing is the following. Where is the support level, and am I going lower? If you're not headed lower, that means that buyers are starting to pile in at the support levels that make people go, yeah, I can't get it lower than that. Everybody, anytime I send it out there to sell, the buyers go, absolutely, I'll take it. So this area in this sideways pressure of many, many days is really forming a base that says, you know what? I've got some good support action sitting right here, because every time I come into 69, somebody buys it. I buy at 70 and I'm holding on. So what do you want to see? 1, here is the resistance zone. So if you want to be certain, or as certain as you can be, you wait for it to break the zone, and then the first pullback into the area gives you the buy point, and the edge of your last area of congestion becomes your risk. Could you get stopped out there? Yes. But it's already told you, hey, as long as I don't lose this level, meaning I don't close the day under this level, I'm going to be all right. What's happening here today is the bounce is pulling us into a gap fill. Listen, anytime you see price action gap up, anticipate that there are groups of traders that will say, you know what, I'm going to trade the gap because we don't like a vacuum in our volume profiles. And so this is what's happened. They're trying to fill in this space. Now, let's say based on today, you have the sundial folks coming on later. This chart's going to spike. People are going to say, you know, I'm going to buy a little bit here. I'm going to buy a little bit here. I'm going to buy a little bit here. It doesn't mean it won't fade. And if you do buy, remember that your stop zone is now this area that says, hey, I could come all the way into 80 cents. I really could come into 68, but 80 is where it might be going. And so this rotation of, hey, I'm not heading lower anymore. Let me draw a line right there. That's my support edge. So if I want to trade and try to pick a bottom, I want to see it bounce into the near-term resistance, and I want to see it pull back and hold a higher support level. And that might mean you buy it here at 73 when you know the stop is 67 or so, and you manage the risk in that sort of way. Or if you are the type that says, hey, I want to buy, and this is going to be an investment, it might wick down, but I know it's going to hold. If it wicks down and it can't get back up over your 80, then you know there's trouble. Are there any charts that you want to look at to break down, to compare against, to see in terms of the folks that are presenting how they might look in the grand scheme of things?
Always. What about, let's see, do we want to keep it to NASDAQ and NYSE?
We can do anything you like.
Okay. What about consortium, CNTMF?
CNTN.
MF.
M. Aha. All right. So, wow, what happened here? That's interesting. What a wick. So, take a look at this. This is actually a very nice chart. So, you might go, why? But it's a nice chart because the participants are very even-handed. You're not seeing massive motion in terms of, wow, I'm moving in, except for this crazy thing, don't know what happened there, but you're not seeing savagery that makes you go, oh my gosh, I can't sleep tonight because I've got 1,000 shares sitting here. What's interesting is that over the long term, how long have these guys been around? Okay, so they went live in June of 2020. Wow, more power to them. And so they held steady at around this 38. And so they're really, what, 320% higher than they were here. And then they had these lovely lifts that come in and just about hold their support zone. And now they got some pretty good traction going, right? Now, is this a formation that makes you say to yourself, "Ooh, this is going to make me $1 million"? Not yet, because it's not moving in terms of catching on. So, what makes a chart successful from a trading perspective? Well, from a trading perspective, we want to buy low and sell high, or we want to sell high to open and buy low to close. Right now, momentum has not hit this chart. It's really range bound in the current formation, and the high of $1.30 has not been tested since April of this year. And so this is going to be where everybody's going to say, here's where the rubber meets the road. If it breaks out over this level, it's only got shallow pullbacks. And here's the thing. There's a saying in trading. It's the bigger the base, the higher in space. And so the longer it holds traction here without dipping below, when it does break, there are going to be a lot of people saying, here we go. Let's watch it. And so this is a great one to put on your list and say, all right, I want to see when it gets to 127. And when it gets back to 127, I'm going to start putting it on my daily ticker events that I'm going to watch. And once it gets up over there, because it's had a base that is so long, we can compare it to the last place that it had a base that went for a very long time. it actually moved, what is that percentage? It goes from 86 to 136, so that's about, I don't know, 87% or so up in the space. That's a big move, 87%, 85%. And then it comes right back down, and take a look. Old resistance, new support. And that was the last time you got to add to the position at a really nice support level. So as it breaks out, you're going to look for really a little bit above where it is today at 112 or so. And you're going to wait for it to get up above that 130, 140 area. And then you're going to watch it spike and then fade. When it fades and holds this zone, let's say it fades, but it never comes back to the 140 level, and it stays up above the 150 zone, you know it's going to hit a momentum space. So this is going to be a very interesting thing to watch. I would say put your alert to when it gets to about $1.27 and then watch it move. Again, how does a chart move when it's expanding? The first thing it does, it fails to hold lower. Second thing it does, it breaks into resistance. The third thing it does, it pulls back and it holds its support zone. From that area, you get to go, you know what? Here's my buy space. How about another?
Love that. That was fantastic. We do have a couple that aren't presenting in this conference, but I am interested to see your thoughts on Hexo, HEXO.
Okay, so this one looks very strong, comparatively speaking, right? Here's the open, resistance/resistance. Here's why this happens psychologically. You get in at the IPO and it starts falling, and you're like, grief, I've got 10,000 shares here. I'm just waiting until it gets back to the old high and I'm getting out. This is exactly the psychology of the double top. That is the psychology of the double top. People get freaked out because they're trapped in the trade. They lose the belief they had in the company and they just trim their gains. And so what this has done is it did the lower congestion reversal, but it held the lows, always important. Then it goes to the next highest rejection area and it holds a new support zone. Old resistance here, it holds this zone, and then everyone's thinking to themselves, oh my gosh, here's a head and shoulders pattern. Listen, head and shoulders patterns are relative motions, and a very good chart guy named Tom Bolkowski says the most that you can really expect out of a head and shoulders is 50% from the neckline to the head. Now we can measure that, we can eyeball it. So we have 670 to 1105, so that's what is that? $5? Not even $5, right? So 4 and something. So the break should be half of that, only $2. Minimum. $2 is what you're going to get. So it's going to go from 650 to 450. Doesn't even. It goes to 514. Do not use head and shoulders patterns to trade. They are anecdotal. Okay? So they're bad. And they give you no precision. You know exactly what's going on if you count your candle formations. And so this one looks really good. It faded a lot less than things like Tilray or Toke or a number of different things. And it's pulled back. Look, old resistance, new support. So now it's in a little bit of a range. Here's the thing. High, lower high, lower high. Low, lower low, lower low. Charles Dow gave us the definition of trend. So this is in a short-term negative trend with a clear base, at 540. So when we are looking at this bounce out, like it did a few days ago, what should we be thinking? Resistance? Resistance. Sellers are going to come in. What happens when a chart is changing direction? It bounces, stops heading lower, bounces into resistance, pulls back, and holds the present low. So let's go here. It did the same thing here. Look, we think to ourselves, wow, that's a green candle, but it's still lower. So no, sorry. Next one, we know our resistance edge is right here, old support, new resistance. It's sitting here. What it starts doing is stop. It stops heading lower. And when it stops heading lower, we wait for it to break through resistance. And then on the pullback, we get to buy. Now, this is a daily chart. Here's the magnificent thing. You can do this on a 4-hour. You can do this on a 1-hour. You can do this on a 30-minute. If your brain is big enough, you can do it on a 5-minute. My brain is not big enough. It's really hard to do it over and over again on a 5-minute formation because you're constantly recalibrating what's going on with motion. And so starting from a daily formation and say, okay, where are these guys going? Listen, this is telling us we are likely to head higher just so long as we hold support. So if we're looking at this and we're thinking, ooh, we got a gap fill, all the cannabis have, a ton of them gapped up 4 or 5 days ago, I think the fade is going to give us a good buy zone. And there's your support. Where is the big level that you don't need to break if you're in Hexo? You don't want it to break 5. You don't. But the chart is clearly exploring where the last line of support was. That's really what they're seeing. The traders are saying, all right, show me the last area people were really enthusiastic about buying. I'm going to look back to the left and I'm going to say, all right, where did they try to buy? Even though they failed, they tried to buy here and it held. And I say that's down here near 624, which really only gives you about, well, I mean, that's a fair amount if you say, hey, 560 is my stop from a trading perspective. But watch for these guys to pull back into the formation and begin to bounce here before you think about getting involved in the trade. Listen, if you use moving averages and VWAPs, they are meant to be guides, but they are the first and second derivatives of price. And anytime you use a derivative of something, it loses the essence of what it actually is. I hear you.
Yeah, Anne-Marie, that was awesome. I didn't want to like cut you off mid-sentence.
Oh, no.
That honestly, some really wonderful breakdowns. We are at about time. Do you kind of want to leave us with a thought on the cannabis industry as a whole, and maybe your thoughts on investing in cannabis stocks right now?
Okay, so my thought is the following. Investing is a commitment, and a commitment to a belief in a company, a belief in a product, or a series of products, or a business line, right? If a portfolio manager is building something, he wants the business case from an investment perspective. And I believe that there are 2 places that the cannabis industry has. It's got a trading space and an investment space. And from an investment space, we really are at the kernel event. And so that means if you buy, you're going to have a great commitment to the business, and that business therefore must deliver to you certain objectives. Because cannabis is traded the way that it is, I would say use it as a trading vehicle until there's more government backing, because with one stroke of a pen, your investment could be completely nullified, essentially. Not saying that's going to happen, but you've got to prepare for, wait a second, what if this money I put in here gets gone? Is it going to be okay with me? Am I going to be okay with that?
Yeah. Anne-Marie, really wise words. And thank you so much again for being here with us.
It's my
pleasure.
I
love listening to you. It's my first time getting to kind of navigate this, but I learned a ton just being able to listen to you firsthand.
Thank you very much. I appreciate it.
Thank you. We'll see you soon. Thank you, Anne-Marie.
Take care.